Hey traders, what's going on? Jamie Setley here. It is April 3rd and the stock market's rallying again. Um, Midweek strategy webinar here. Let me know that you can hear me. Yes, says Marco. Okay, great. Well, let's dive in. We're going to start by looking at the $2 indices. So if you go back to Sunday's post, those charts talked about a few things. One being essentially open to, I guess, anything, um, because we've got a range in the dollar, no kidding. And that the DXY chart still, I think, favors the idea of the barrier triangle, but that, we are still in the range, right? So, we're following that short-term pattern, but we'll look at that next, but this is the US dollar. So the one with Aussie and pound and yen in it. And if we are going to break to the top side sooner rather than later, then this little low that we got here this morning is a pretty good place for us to make the low. So you've got, essentially look at within the range. You've got these highs over here from January. You've got these highs over here from March, and it's a 38.2. And of course, we have the slope right here. Okay. That said, we've come off of the resistance line, right? So there's no saying that we have to hold this. I just want to let you know that we are at a support level. We have hit a support level in the US dollar index on a near-term basis, right? You can see that very well in the Australian dollar, which is right back to its parallel, of course. All right, so then going to DXY, this is the chart we looked at last night. So we've zoomed in, right? We have this barrier triangle, okay? A higher wave B, C, D, E, everything contracting since the A wave with the B wave above the origin of A, which is why it's called a barrier triangle. And then we've got the 5 up, and we're looking for this pullback, and we're getting it, right? And looking essentially for support, I think probably around that 96.80 mark. And if we go even shorter to a 60-minute chart, you can see what we have here, and that might just be wave A down. So if we're looking for a potential next high, up around that 97.30 area. So that basically for the rest of the week, at least, we've got 2 spots to think about in terms of trading. So 97.30, and this is going to apply, of course, mostly to euro, but 97.30 on resistance, 96.80 on support. Okay. Holy crap. I'm just sitting here looking at the NASDAQ is up. It was like up 30 in the open, 70 when I started the webinar. Now it's up 86. This is, I mean, whatever. This is nuts. Okay, so DXY, pretty clean, right? For a change, actually, pretty clean pattern. So I'd be looking at, again, euro longs up at 97.30 DXY, and which should be above the euro low from yesterday. Okay, why don't we bring that chart in, actually? All right. So if we do a 618 here, I think you get 1210, which is why I said 1210. Yes, 1210. And that would also be on the top side of the 2-4 line. Okay, so you're basically looking for support right there, which is right there. Little head and shoulders, possibly, right? So we'll be looking at euro longs into 1210, 1180 stop, looking for, 1290 to 1310 or so. I've got this red line here marked at 1301 because that's the high volume breakdown day from over here on 322, which was, I believe, that really bad, was it an ISM number or something? It was whatever the number was in Europe that was a terrible number a couple Fridays ago. And that's where we will be looking for resistance likely in euro at some point. Hold on. Ty says, how should we use your high volume for better trading? So I try to point them out in terms of I use them as reference points. Now, so a lot of times they provide support and resistance, but what I use them more for is like I said, a reference point, meaning that we're looking for kind of a bias on one side or the other, right? So in the case of euro, just using this point, that 113 level, which is already important and has been for a long time, we'd be looking at that as kind of important for a bias. So you kind of be bearish, below it and look for it as resistance. And if you broke through it, I'd consider it a minor behavior change, although nothing super significant, unless you get a pattern to go along with it. But that's how I'm looking at it. Okay. Okay, so that's the euro deal. Again, two levels to pay attention to, I think, the rest of this week, 1210, and then up around the 113 area. Looking at dollar Swiss actually is kind of interesting here because we did find resistance kind of the last couple of days up on the 99.90 area, which has been pretty important. I mean, you could call it parity, basically, right? And that area has been kind of important for, the last, almost the last year. A lot of resistance there last summer, right? June, August, for a period kind of in December, and then even earlier this year, we've had some trade around there. So, that's kind of interesting. You have a bearish fork here, really not that, I wouldn't consider it all that useful at this point. I'm continuing to follow it in case we continue to trade between it or find resistance on the upper parallel or something, but at this point, it's not something that I'm really trading on, but just wanted to highlight the parity thing here. And remember Euro Swiss that we talked about a couple weeks ago? I still think that the big level for Euro Swiss is going to be down here at 110.90, and that's just the trend line back to 2015. So I'm keeping an eye there. I've got an alert set because what we want to see, if you're, in order to go into more of a euro, thinking that the euro's got, maybe something in it on the upside, like something actually sustainable, you'd kind of like to see this hit support, in my opinion, and get a good reaction off of it, right? The Euro Swiss exchange rate is pretty important in terms of overall euro health, if you will. All right, so there's that. Okay, moving on. Cable, just kind of outlining levels here because that's frankly, I think, all you want to do if you're looking at the British pound, rather than making a grand statement on where you're going. That's kind of true for anything, but especially with British pound, given the kind of fluidity, if you will, of what's going on with the Brexit situation and rumors here and there and blah, blah, blah. But we did hit resistance. We've come into resistance zone. We had this outlined as basically 131.80 to 132.20, and we did hit it. And we, in fact, hit the parallel to the tick today. So, I'd be looking lower from here. Not to say that you can't continue to press and press and press into this, this level or this zone. But, generally, I think that cables hit resistance, and I'd be looking down towards, basically call it 30.84, which is the square root level here. And then, of course, 31.30, which is the monthly open. Still not a huge fan of trading cable here other than very, 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 very short term. All right. Aussie dollar, I mean, what else are you going to say? Pain in the ass, really. Super tight. I thought that after yesterday's breakdown off of the median line that, if we got the entry at 70.90, which again was a high volume level, that we would be kissing it goodbye and finally get this drop down into 69.70. And then we would see if you could get a longer standing low. But here we are right back at the top of this thing. So, it's pretty clear. I mean, if we go through the highs of 71.33, going to get stopped out. And at that point, my thinking would be that you go up to 72, which would be the 200-day average and the next parallel up. And of course, you've got the high there from 221. But yeah, a real difficult environment here to trade, at least for me. Maybe it's easy for some people, but just haven't been in the flow with this at all. This could still work out, given that, we are at resistance. Okay, I do want to, make that clear. This is resistance. But if we go to a short-term chart, like here's the hourly chart, it looks like to me that you're getting an impulse up at this point, even a 10-minute chart. So if we did pull back before we went through the highs, we actually may have an opportunity to bail out of this position at like break even, okay? Because at this point, if you pulled back, I'd actually be looking back at that 70.90 area, which again is the high volume area for resistance, okay? So we'll let that, so just see what happens here, okay? But yeah, you pull back off here, which is resistance, and 70.90 does become a possible support level, okay? Ty says signals don't work well in low vol. It's something that low volatility environments have. My trading has never done well in them. I try to just keep it together during the low vol environment, frankly. Like try not to, try to protect what I've got, frankly. So at least, that's for me. I mean, there are some low vol environments, where it works okay. But generally speaking, I think that's a true statement. Low vol is not something that really has worked out for me in my trading career, frankly. That's a true statement. Okay, so there we have, that's Aussie. All right, Kiwi, right back at resistance. Okay, this was the chart from yesterday. Frankly, it's very similar to Australian dollar. Now, this is the high volume level from Kiwi. You can see that breakdown. That's the RB and Z day. That's 67.97. That's why the entry is where it is. That's the close of that day. So really, you don't want to see us much above here. The monthly open and weekly open, of course, because that was this week, is 68.12, and that's kind of a last area. But I would handle this very much like the Australian dollar in the sense that, we go to short-term chart here, you can see us right up against that, where it does look like 1, 2, 3, 4, you get a little push here, you're going to get 5 up, and a pullback is actually one where it would get out of the short and look to buy it, okay? And you can see how much this all fits actually with what we're seeing in DXY, right? Where we're talking about getting, maybe a little bit of a bounce in the dollar and then lower for another leg. And then maybe you go actually higher again in the dollar and lower in the other currencies, okay? All right, so that is where we are with those commodity currencies. Let's go to the dollar CAD. Very close to important support. It's simply the channel back to the 2017 channel, and the center of that channel is right at the 50-day average, which is going to be 32.85, 32.90, okay? You can see, obviously, we've been looking at this forever. It is really important, so simply know that you are coming into a big level for the Canadian dollar. Would be looking for support there. That's kind of all there is to it, all right? Now, in this case, the high volume level is 33.50. and that's also the monthly open. So 33.50 is going to be an important spot, not just for the rest of the month, but perhaps longer. That's a high volume day right here, 33.50. It's a big important level. So two levels to pay attention to in CAD. Again, 32, call it 32.90 and 33.50, pretty tight. So the way I'd look at this is on a short-term basis. You want to buy into 32.90 for support for a bounce, but understand that 33.50 is going to be difficult. And if you get through it above it, that would be important. That would be bullish. Until then, it's just back and forth between these two levels. Ty says, if you have a buy like this, do you not do it because of the vol? Well, you have to ask, it's not, no, not that, but the question is there a pattern, like a setup, right? With Kiwi, for example, and with Aussie, to me, there are setups because Kiwi especially broke this well-defined trend line, right? So that's a setup, okay? So it's a combination of using the setup and the levels, right? And trying to enter at the level, which we did, and they're a setup. In this case, it's a short setup, okay? Aussie is the same way, although not as nearly as good as Kiwi, in the sense that we also broke this line. I'm not even considering this valid anymore because we've traded back and forth through it now several times, and frankly, it's getting tiresome. But we also do have this well-defined median line in the Australian dollar. So Kiwi was more of a setup. Aussie, I did it because you'd had the levels here, and frankly, it seemed to make sense, given this kind of rounding toppy action, right? And simply lower lows and lower highs. CAD, I don't really see a setup, right? Got all these three-wave moves, 3 down, 3 up. Maybe you get another 3 down. I'm pointing out the levels in CAD, but I don't have a setup. All right, dollar yen. Pointed this out on Twitter last night, but you do have a pretty big area around here where we are right now. So interested to see kind of where this ends up. But you're at resistance here, okay? If you can put in kind of a reversal day, we got to watch the rest of the day, of course, and see what happens. But all these lows, right? Resistance, support back in October 2018, 200-day average, this trend line. I mean, there's a lot here. So if you were to put in a reversal day and close down near the lows or something, that would be something where you have a high to trade against. If we don't, and if we break out through the top side, then frankly, you'd have to be looking at this level as support. But again, they're not a great setup. You'd want to see a pretty strong break, come back and establish support back on this level, and then you could try to take it higher, probably back to maybe even 1280 or something like that. But again, just understanding where you are right here in the understanding where you are in longer term context. So you are on a resistance line and just a massive kind of decision point here. Excuse me. All right. Want to take a look at some commodities and some. All right, so crude oil, this level, okay, we're pressing a pretty big spot here. 63.70 is really important. I mean, that's the low from June of last year. Okay, you've also got the 618 of the entire drop. So you've got a fib and you've got the 618, right? Pretty important. I would be looking for a pullback off of this level, right? May have started a day early because we traded up to 63 and change. Sorry, 62.99, pardon, and we have pulled back slightly. But frankly, I'm just kind of watching these two levels here. So we were able to get pretty good support. That 54.50 area came up, traded on the lows from March of last year, pulled back pretty good, right? Resolved to the upside. I was thinking we'd get a little deeper pullback to this line, and then maybe look for another push, that the one that we got. But wasn't to be. But now we're at a point where, frankly, we've got resistance a little high, and I think that the sentiment is getting up there. I think DSI, last I saw it, it was in the mid 80s. Got a lot. You're seeing a lot of that right now, right? You're seeing Euro down in the teens. I think we have, I mentioned the NASDAQ in the 90s. Can't imagine where it's now. Can't go over 100, but that's where I'm joking, of course, but that's where you'd think it would be at this point. And crude was up here too. So there seems to be a lot of risk from a sentiment standpoint, a short-term standpoint. But yeah, big levels up here. Pay attention to 63.70 in crude. Looking at the metals, I still kind of am standing by this idea that you're going to get a bigger kind of A, B, C move down, right? That 1301 level that was outlined as resistance last, I think it was either last Wednesday or Thursday, was resistance on Monday. We got a high at 1301.70, so on the mark with that. And looking down towards 1275 near term, if we did, bounce a little bit, then you're still looking at resistance back, 1303 or something like that. But 1275 is a spot later this month, and ultimately 2 equal legs down is going to get you that huge 1250 area, and that's where, in my opinion, you'd probably want to be thinking about getting longer term bullish again on gold after a 3-wave move down to this area. 200-day average is obviously going to be there as well. So if we were to draw just a corrective channel, you can kind of see that we are trading around the center line right here. So that could be useful. Don't really need it. On silver, you do though. So silver is sitting right on support. My thinking is that it doesn't hold, although I would have an open mind as to what silver could do right here. Essentially old resistance right here, and this level here, which is 15.15, which is the low from July of 2017. If we start to make headway towards the resistance line up here, which is just a channel line drawn off these highs, 1535, I'd pay attention. If you get through that, then I, kind of start to think that maybe there's actually something to deal with in terms of silver on the upside. Until that happens, though, or unless that happens, I should say, I'm still leaning towards the idea that you're going to get a 2 equal legs move down towards that 1440 area. And you can see this is very much like the dollar in general, right? Like the suggestion from, the barrier triangle and DXY and the impulsive rally off of the low from FOMC is that we're going to get, one more dollar move, and then we're going to have the huge dollar top in place. Okay. But, we've got to be open to the idea of maybe the top's already in. I mean, it's been this process is taking forever. I wish it would just get done with already. If we start to break down the dollar, okay, great. But until that happens, and until silver can break through a level here, I'm just kind of, observing. So levels to pay attention to, basically 1535 or so. And if you do break yesterday's low, I think you're heading to 1444. By the way, 1440, I have the dark line here. It's because that's weekly reversal support, right? That's the low week from November, and that's the closing price of that week. So the fact that it's also 2 legs down is very interesting, and it should be marked as a really, really important spot for silver, okay? All right. Looking at equities, we have some interesting stuff happening right now. The VIX, which is right here, is actually positive on the day right now, and you've got markets that are like through the roof. Crude oil is coming off pretty good right now. It's off 0.7. You've got this right here is put call ratio, CBOE put call. The black line is the single, just the days. Okay, if we were to close here, this is a closing price, this is a line chart. If we were to close here, the put call ratio would be the lowest since December of 2016. That's nuts. You get really low numbers at market highs, right? Put call meaning there's less puts being bought for, against calls, and you get really high numbers at market lows. So like this huge level up here, that was December 20th, right? We made the low on, that was, people were buying almost 2 times, 1.8. People were buying almost 2 times as many puts as calls at that point. What we've got right here, though, is the exact opposite. So you can see that put call ratio is the highest since 2010, which was February 2010. Okay. Now we're at the lowest. It's the exact opposite in terms of sentiment, literally the exact opposite. So 6.4 again, December 2016. Even the highs that we had in January of last year before the VIX apocalypse and all that stuff, January 23rd, for example, and the high was on the 26th, we were down right around here, about 0.65. Right now, we're actually a little bit lower than that. Again, this is a close, so we have to see where it closes, but kind of important. And what we can also do, what I like to do to it smooths it out a little bit is, hold on here. So I put an average on it. So this is a 5-day average, okay? The 5-day average right now is the lowest that we've been since June 14th of last year, okay? So let's see where we were back then. June. So that was right here, okay? So June 14th is right there, okay? That was a high, 27.92, and within, 2 weeks, we were 100 S&P points lower, okay? So you can see that, how that works out, right? To give you an idea of the January 23rd level, that was right here, and of course the high was 3 trading days later on the 26th. We were looking at that previous chart. All right, looking at, so that's a pretty wild chart as far as sentiment's concerned and put call. If we look at, as I mentioned, I tweeted this out earlier, but here is the NASDAQ. And we are now into this old 2018 line, which is off the Feb and April lows, right? I mean, none of this matters unless you get some sort of response to the market, obviously, but I think it's silly to just hide your head, stick your head in the sand and ignore this stuff. So yeah, that's where we're looking there. I am looking for resistance, but what else is new? A couple other interesting little tidbits on the market. Hold on for a second. Okay, here's the NASDAQ composite. Again, we need to see the close because that's what's important. But if we do finish with breadth this high, right, we're up 752 more stocks are up than down today on NASDAQ composite. You are going to have a new high in breadth, all right, which is over here. Remember last night I mentioned that the high in breadth was still 225, right? That's still the case, but we have to see where we close because we're right at it. We're right at that level, okay? As I have said a couple times, when it comes to breadth stuff, we need to see breadth itself start making, start weakening, like making lower lows before you can have any sort of real damage in the price chart itself. That just hasn't been the case yet. So, I'll update as need be on that situation. Other than that, you've got a draft. This is the 10-day breadth advanced decline, and that's pretty drastic. It's at resistance right now, actually. Oh, dollar yen. I did talk about the longer term chart. I did want to highlight a very short term pattern though, or a short term picture of this. So there's that trend line going back. This is an hourly chart at this point, but let's go to a 4-hour chart, actually, a little better. Still important, but I did want to highlight essentially the right here. So if you do pull back from here, I'd say about 111.15 is actually a spot where I'd be careful. You know, if you turn down from here, you don't really want to sell into this level, because 111.15, you can see the old resistance back here from February. That actually could be support before you go for another run. So had mentioned that we're at a critical spot, but at the same time, you really want to see us break that 11.15 area to be safe. I'd say below 111 in order to have any sort of downside bias on dollar yen. Also, I think that we should probably highlight the seasonal stuff here for dollar yen itself. So with US dollar, right, here's the seasonals turning down. With dollar yen, those seasonals actually turn down after this week, right? Seasonals have worked okay. The low on 322 turned up that week. Remember, we got out of a good short then reshorted and lost some pips there. But if we turn, basically after this week, if you finish strong this week, then we'd start to look for some, I'd actually take more serious any reversal indications, because after this week we will actually be in the negative, the negative seasonal tendencies for dollar against the Japanese yen. Okay. All right. Okay. So with all of that said, I have gone through everything that I had made notes on to talk about today. I'm sure there are some more things that we should look at. Let's see. Actually, let's take a look at the Nikkei. The Nikkei. So here's the Nikkei pressing back into what I consider to be a pretty big spot. You can see the highs here from December 13th, old support from August. And of course, you had the March 4th high up there, and we're getting right back into it. So, gonna get some pretty serious non-confirmation in terms of the Japanese yen and the Nikkei, because as we know, the Japanese yen is not above its March 4th high, which is way over here. So you're going to get big non-confirmation on that. Another warning, doesn't matter, nothing does in this market. Pete asking about, he just mentioned, asked about oil. Yeah, we took a look at it earlier, but here, just real quick again. So here's oil. I think that 63.70 is going to be a really big test for crude. That's the low from June and the 618 retrace. And, if you pull back before then, you might be looking for some support back near 60 bucks and then up into this level. So, kind of at resistance now from these two highs, the line off these highs, February highs. It's February 4th, February 22nd. Glad you actually brought up crude too, because we're getting into the important seasonal stuff for crude as well. Bullish, but then, essentially bullish through May. So like you kind of want to be looking at buying dips, I feel like, in crude up until May from a seasonal standpoint, but we have kind of already run up so much, right? And looking at the 63.70 spot is a big area. So pay attention to that. Looking at, you had some questions on, Marco had a question on CAD yen, so why don't we go there? Pooja asking about expiration. So you want to trade the front month contract. So like right now, May is the front month contract in crude oil. Okay. But generally speaking, you want to trade the front month. So whenever you pull up a continuous chart, it'll automatically show you the front month. Okay, CAD yen. Big nasty range. I guess you could go with several interpretations on this. One, that you've broken a 3-wave drop. The clarity is just so lacking here. But if I were just looking at this, just based on this chart, I don't care what it is. Let's just say it could be a price of avocados for all that we care. We are looking at possible head and shoulders, but you could have a head and shoulders failure, right? In other words, a signal in the opposite direction. If that happens, first of all, I would look at 84.17 as resistance. That is daily reversal support. It's not closed from the high day, okay? 2, if you were to get up there, or even if you pulled back from here, you can count 5 waves up from this low. So if you pull back, I would watch for support. At this point, you've got 82.50, it's a 618, which is also the center line, which has been really important for a long time. If you went a little higher and pulled back, it's 82.60. So either way, if you pull back, you're probably looking for support. Does that mean it's a sell here? Not necessarily. I actually think that your better shot at a short is going to be up here, 84.17, after you take out these highs, and then I'd look for some reversal potential. But yeah, that's about it. So 2 levels to pay attention to there, and then probably 82.40 to 82.60, excuse me. And if we've got anything else, I will be happy to answer it. Otherwise, I'm going to wrap it up because there is no sense in just talking to talk. All right, going once, going twice, and we are finito. All right, so I will archive this and get it up ASAP. Most important thing to pay attention to, in my opinion, right now is going to be this DXY chart. All right, I think that it does offer several good opportunities for the rest of this week, and that's going to be basically dollar bearish up around 97.30 and thinking about dollar bullish again down at 96.80. And again, this is going to pertain specifically to euro, right? Okay, so watch the Twitter, private Twitter feed, because I probably will be sending out important updates to the Aussie and Kiwi trades, assuming that we actually turn over at some resistance here in the near future. All right, have a great rest of your week, everybody, and thanks a million for tuning in, and I will talk to you guys later. All right.